Debt can feel like a never-ending trap, especially with rising inflation and maxed out credit cards. And this drains our financial freedom. And many find themselves really stuck in a cycle of high interest rates, minimum payments, and growing stress. But breaking free is possible with discipline. And in this episode, we'll explore some practical strategies for crushing debt with co-founder of and CEO of Truth in Equity, Bill Westrom. Now, he is the mind behind credit line banking, a revolutionary financial strategy designed to help American consumers regain control over finances and to build true independence. So whether you're overwhelmed by credit card balances or you're just looking for a fresh start, our episode today will at least give you some ideas for some small intentional steps that will lead to lasting financial freedom. So stay tuned. This podcast is brought to you by DJ Works Media and HalftimeSuccess.com, offering resources and insights for those at mid-career or the halftime of life. Explore our diverse categories, including courses, coaching, health, music, software, and travel. We're here to help you make this stage of life your best ever. So get our new articles, downloads, and podcasts by signing up for weekly updates at goalsforyourlife.com/newsletter. Now, let's dive into today's episode. Well, it's great to have Bill Westrom. I got your name right. Bill, thanks for being with us today. And you're up in Oregon. I'm on the West Coast as well. That's pretty fun. You had a hailstorm today. So did we. Mm-hmm. So we do share that. So, Bill, you have a great background. I like my guests to introduce themselves a little bit more than me introduce them, even though I've introduced this episode a little bit. But, you know, we are all about creating your best years ahead. And part of that is getting out of debt. And it's being able to live your best life, really a lot of freedom. And you really talk about this a lot. And that's your business. And we've talked on this podcast, we've talked about investing and saving and how important that is and budgets. And but you have this concept that you are really helping people really get out of debt, especially credit card debt. So give us a little bit about your background, Bill, and why you're even doing this.
All righty. Well, Deborah, thank you so much for having me on the show. I always, I'm honored to have the opportunity. So thank you very much. My story, it can get kind of long and it's kind of boring at certain parts, and I got into the mortgage business by accident in 1996. So almost 30 years in the business. And what everybody should know for sure, nobody's ever taken an elevator to my office. Right. So I'm a foxhole guy. I've been in the foxhole with people for 30 straight years. So I think it's important people understand that when they hear my message, it's not about the guys at the top. It's about us at the bottom because we're the ones that keep this whole machine running, especially the banking system. But again, I entered in 96. I got introduced to this strategy that we're going to talk about in the early 2000s. And in 2006, I grabbed another mortgage broker and said, let's take this strategy to the public. And that was in 06. So, most businesses go out of business in 5 years because people don't want the product or they don't trust the company. Well, we're 19 years old, so we're doing something right along the way. And all we do is we focus on education, You say the word help people pay off debt. And I really don't like the word because help reeks of dependency. And a lot of the financial situations people have at the street level is dependency on somebody else's advice, somebody else's product, etc. And I teach and I coach people how to implement a smarter banking and borrowing model, if you will, so they can save more, stress less, pay off debt 4 times faster than normal, or if their life is taking them in for investments or whatever, whatever direction people want to go. Tell me where you want to go with your life. We'll point the car in that direction, and I'll help you get there 4 times faster than everybody else.
Well, you talk a lot about credit card debt, and I talk about this as well, how debilitating that is. Interest rates are very high on that. And over the last 20 years, this has just doubled for people. And a lot of times we blame it on inflation, but it's really a lot of times it's habits as well. And so what is your reason and why has this happened, do you think? And how has it happened that credit card debt, especially, this is what is so debilitating for those that they just can't get caught up and they can't pay off those main bills. And there's always another bill coming.
Well, welcome to America.
Yes.
Right?
Opportunity.
Yeah. Well, if you ever heard or know anybody that reads the New York Fed report on consumer debt?
I don't talk to people, personally that do that every day. Yes.
That's how much of a geek I am. That's some of my primary reading. But if you look at the last 20 years, we owed in 2003, we owed 18 trillion in debt.
Yes.
It got up to about 13-ish until the bubble popped in 2009, and then it dropped down to about 12. From 12 to today, we've gone from 12 to 18. Now, when you break that debt apart, 12 trillion of the 18 trillion is mortgage debt, is mortgaged. And credit cards is actually, it's like 6%. It's one of the lowest, it's six, you know what I'm saying? And so the mortgage debt is really the primary debt. And if you break it up age group to age group, 18 to 29, they're not really on the radar when it comes to the overall debt. Student loan debt, yes. Everything else, they're pretty low. But if you look at 30s to 40s, 50s, all the way to the 70s, if you look at the breakdown of the debt, mortgage debt, car debt, all the debt is almost the same for each age group. You think of that the 70-year-olds owe just about as much money as the 30-year-olds. Now, why is this? Right? Credit card or not, interest rates or not, because interest rates have been rising for the last 12 years, but that hasn't stopped people from borrowing money. People have a need or a want. If it fits in the paycheck, they're going to take advantage.
Right.
Follow? And so if you start breaking it down even farther and start breaking apart the paychecks, right? The money flow, where's the money?
Right.
The average American, 30 to 40% of their gross pay has gone to taxes and a 401k. 30 to 45% is dedicated to servicing debt, mortgage included. 30 to 45%. That's $3,000 to $4,500 a month out of a $10,000 income. Now, if you go to the high end between those two, $4,000 for the government, you have $4,500 going to debt. That's $8,500. That leaves $1,500 a month for everything else.
Right.
And if you look at, we break down the middle part, the credit part. Well, what's the problem there? Well, it's not the credit itself, because you don't own a home, no education, no car. Credit is a staple in our society. So we got to look at the terms of repayment. Right? 30 years on a mortgage.
Right.
Well, who sets those terms? Who sets those terms on a 30-year mortgage? Is it going to take you 30 years to pay off that loan? No, because those 30-year terms, that's just the bare minimum.
Right.
That's what you just have to pay the minimum to keep them happy and live up to your terms of the agreement. But nobody ever said it had to take you 30 years to pay that off.
Right.
Like going to
less.
For a 30-year to a 15-year mortgage. You don't have to get a 15-year mortgage. Just make a 15-year payment on your 30-year mortgage. And, we were talking about inflationary effects. Well, if you're making a 15-year payment on a 30-year mortgage and you have a problem with the economy, well, you scale back towards the 30 years.
Right.
If you get a 15-year mortgage, guess what? You're done.
Right.
It doesn't matter what happens to your life. You got a 15-year mortgage payment. So there's one little trick for people that if you want to accomplish a goal without sacrificing yourself to the unknown economy, that's one way to do it.
Right.
All right. Now let's talk about credit cards, the interest rates. Okay. I'm going to say something that you've never heard before. The rate doesn't cost you the money, the balance does. Because a 24% credit card with a zero balance is no interest.
Right. Yep. That's what I pay every month. No interest.
6,000, right?
Right.
Well, you're one of the lucky ones,
Yep.
right? Where you have the resources to do that. Everybody doesn't have that.
It's not only resources, it's discipline though, too. Because both of those things I think is
there's
together.
Another word I don't like is discipline, because we fail at it every day, right?
We sure do.
Did you do
that's what it takes.
Did you do your 100 push-ups today, Deborah?
No, but
Not
I
very
did my
disciplined.
workout early in the morning. So no, there's a certain routine though. And I think that is important to factor in here, because people are not, they're used to being able to have that freedom, with that card.
Well, I call it fiscal responsibility.
Yes.
Just be fiscally responsible, because everybody knows I shouldn't be doing this. I should be doing it, But let's go back to the credit card and the high interest with a balance. Well, let's say we have a $6,000 balance on a 24% credit card. And we had $3,000 of spending money sitting in our checking account.
Yeah.
Can you use a credit card for spending? Yes, we can. So if you took the $3,000 and paid it to the credit card, then the $6,000 goes to $3,000.
Right.
You just cut your interest cost in half.
Right.
Without chasing an interest rate. You chase the balance.
Right.
And that's the foundation behind my program. Chase the balance, because the balance is what costs you the money. Now back to our little example. Let's say, so you knock the credit card down to $3,000 and you spent $2,000 on it. That would obviously bring the balance back up to $5,000. What have we done at the end of 30 days? We only paid interest on $3,000 instead of $6,000. So that saved us 12% on the money, right? And we paid off $1,000 of the credit card just by changing the flow of the money. Does this make sense to you?
It does. Yeah. That does make sense. I'm not sure if my audience will fully find that. They're going to have to look at your website a little bit on that. But yes, if you can bring down what you are paying interest on, you save a lot of money. So that's why it's really important. Get that basic, the big costs for people are their homes and their cars usually. So those are the biggest costs. So, but if you can bring down what you are paying interest on, of course, I mean,
that's the key.
It kills you to pay all of that, the debt. I mean, in our country too. I mean, it kills you just to think, okay, that's how much debt we're just paying off the debt right now. The interest, everything on that. So it's tough.
And that's why I look at the terms of repayment, because if you follow their terms of repayment, then it doesn't matter how low your rate is. You're always going to pay the maximum.
Yeah.
And is it a wonder why the credit card company, and nobody's coming to you and saying, hey, this is a better way?
No.
Because you're going to take that. That's against their business model. Not that they don't want that for you, but that's nowhere in their purview. It's not in the training manual anywhere.
Yeah, well, that's how they make money. They're going to make money. That's exactly.
And I'm all for making money, but it shouldn't be at our expense while we're trying to figure out how to make our life run following their terms.
Yes.
And that's why what I do is so important, is that I just need people to understand you have alternatives. They are not the gods of this. You control the money. If you can hold it, you own it.
Yeah.
And that's why with credit line banking, if you're banking your life out of a line of credit, and the credit card's a line of credit, unsecured line, HELOC, when you have that revolving door mechanism, then you control the money 100%. You actually take the money out of the bank's hands, and you're practicing what they practice. Leverage your income for financial gain. And this is why my program is so important, why it works so well. I just told you, I talked to a guy that's been with me for 16 years. Wow. 16 years, right? And, he's a doctor, makes good money, and he practices credit line banking by leveraging his income through a line of credit. So he gets more out of the game than everybody else. And the beauty of the line of credit, once you own the line of credit, if you have a $25,000 line of credit, you can pay off $500,000 worth of debt.
Mhm.
in 5 to 8 years
Mm.
just by utilizing a $25,000 line of credit.
I'm gonna come back to my word discipline that you hate. Actually, all of us hate that word, I
We
think a
do.
little bit. But, you have that line of credit. Um, there are people in this world that will say, "Oh, I have the credit." And they will build it up again. That's why when people lose weight on a particular diet or whatever, and they go off of a program and they go on to something else, all of a sudden that weight just comes back on. And so it is a lifestyle. There is a certain lifestyle habits that we have of just making sure if you've got that line of credit, which you are trying to get people to just pay off that big interest, get that down so you don't you can use that money for other things. But if they're not disciplined in that, at least I'll take out the word disciplined. If they're not habitually um, paying that off, I mean, how do you help people establish those habits? That's what I'd really like. I mean, you have good success with your clients. They come to you, they have to have that desire. I've got to get through this. So that's really, really important. Is that what parts of this are important for a client to say, I mean, this is important enough to be able to try something new?
Well, and that's why I have the service that I do, because everybody's unique in their own right.
Right.
Even though we're all doing the same thing on the street
Mhm.
level, your budget's nowhere near anybody you know.
No.
Your neighbors, yeah, your utility bills are about the same, et cetera. But when it comes down to the nitty gritty, you're
Mhm.
nowhere near anybody else. And I'm sure if you talk enough people, if you showed your budget to enough people, they're saying, "Oh, Deborah, you're being so undisciplined." Right. Well, when you come to me and we get to know each other, I can generally tell those people that I'm not going to work with because they're not going to be fixing. They're habitual. They got a habitual problem, right?
That's important. Thank you.
They're
Yeah.
trying to
Yeah.
live a lifestyle
Yes.
that
Yes.
meets the media that they're watching,
Right.
and that's probably the most deadliest thing for the
Mhm.
American consumer is keeping up with the Joneses kind of thing.
That's such a
Um,
good point. Thank you for bringing that out.
yeah. But when you talk to me and I get you into my program, I never dissect anybody's budget. I
Mhm.
don't,
Mhm.
because, I deal with grown adults,
Mhm.
right? And, if your audience is in the midlife
Mhm.
place, part of life, you don't need my help to tell you how to live your life. Everybody works hard for a lifestyle,
Right.
100%,
Right.
right? And our budgets are dictated by the lifestyle we choose to live. I
Right.
know a lot of people that make 25 to 30 grand a month and they are spending every dime. How I don't know how anybody can spend that kind of money per month, but
Yeah.
they find a way to do it.
Right.
And so when you talk to me, I'm not here to teach people how to live their lifestyle. That's none of my business. So
Yeah.
everything I do is just based on the income coming through the door,
Mhm. Mhm.
what's going out the door in debt and expenses.
Mhm.
And I focus on the debt because that's the biggest cash flow killer. And if anybody wants to go through their budget, I mean, I can
Mhm.
help with that. If
Mhm.
somebody really says, Bill, I need to get a grip on my budget, then I can do that. And if I want to give a tip out to anybody that's, struggling with their budget, look at what's going out the door.
Mhm. Wow. Yeah.
Delete anything that's not bringing you value. If you're paying for the gym and going once a month, paying for the gym's not enough to get you there. Don't give them your money. If you're going 3 days a week,
Yeah.
then you're getting nothing but value out of it. Keep
Yes.
spending the money, right? But, like it comes to church tithing.
Mhm.
I'm not going to try to talk somebody out of church tithing. I actually had an employee that tried to do that to a customer.
Wow.
No, so again, I can help in that. But
Mhm.
if you want to help yourself, look at what's not bringing you value. And if those, $5 coffees are getting you to work every day, then they have
Mhm.
value. I'm not going to pull coffee out of your mouth. I'm going to look at the debt payments. What can we control? We need to get that stuff back. Because I got a great saying that this is what I try to help people do by just doing a forensic analysis of their budget before there's any discussion of working with me. My whole goal is to help you get lean,
Mhm.
minimize the outflow without sacrifice, without taking stuff out of your life. Liquid, be liquid. And that's why living out of a line or banking out of a line of credit is so great. That 25,000, anything you pay is yours. It's always available to you because it's your line of credit. And then be independent. Don't force yourself to live under everybody else's terms.
Right.
A big
And
part of what I do for people is I help them establish bill pay day.
Yes.
Everything gets paid on one day. And people are they don't even know they can do that. But we can do that. And that makes you independent because now you're not following their due dates and the ink on the paper and, oh my God. No, we set you up to be an independent, self-sufficient, self-banker. So you don't have to rely on those people.
Now, how do people, this is a good question because it would be for someone, I mean, I'm not in the financial field. My husband has been for a long time. But if I was to come to you, I've got credit card debt. I've got all this. I want to pay this off. Where does that money come from to get that line of credit? Usually a home. Is that correct? Or how do you, because if you don't have, this is the important, I mean, you have so much common sense stuff that you're sharing here, which I love. I love common sense.
Thank you.
Yes, I really do. I really do. I think it's really important. But questions on where does that money come from of a line of credit? Because all of a sudden it feels like more debt. So where does that come from? The interest rate, what is that based upon? You can take seconds out of houses and do all of that because that is a big part of our expense. But how are you able to figure out? That's a little bit of the nitty gritty, but I think it's important. This develops trust as someone looks to, okay, so how do I deal with this in my life? And so that's would be my question on where does that line of credit come from? And the interest rate, I'm assuming, will be quite a bit lower than a credit card debt because the interest rates on those are like 18 or 20%, right? I mean, it's ridiculous. So can you answer a little bit of that question because you've talked about this line of credit and I think it's a very smart thing. I mean, you said it works time after again. I've read, it's wonderful stories on this, but how do people trust that and where does it come from?
Okay. I can answer all of it.
Well, good. Well, we don't have that much time, but we do.
Right.
It's nice to dispel a little bit of this in a podcast. People want to know the more they can contact you, but it's nice to know where those funds, people are struggling right now. And it's not just the cost of eggs. It is lifestyle. It's a lot of different things.
And it's not just the interest rates either.
No.
Right? It's the terms of repayment that are crushing everybody.
Yes, it is the terms. Exactly.
Now, I'm going to answer all your questions. But
okay.
One thing everybody needs to understand, I have to be a credit expert in credit, all of credit cards, right? Any loan. I need to know how they work from the inside out. How do they calculate repayment? How do they calculate interest? What are their underwriting guidelines? What will they allow us to do and not? So I've got a very well-rounded purview of the whole thing.
Right.
How do they get the line of credit? Well, it comes as far as what type. Home equity line of credit, if they're a homeowner, unsecured line of credit, or use a credit card. That comes from talking to me and forensic analysis. I need to get the big picture. If you've got room for a HELOC, we always start there. And home equity, if anybody says, oh, I don't want to go access your equity, that's your money. It's the most invaluable asset that you have if you access it. And that's why I'm a big, big believer in utilizing that equity if you've got it. The rate is going to be the lowest in the line of credit field because it's secured by real estate. And the interest rate's going to be the prime. If you're familiar with the prime rate, I think that's at 8.25 right now.
Right.
And then the bank, that's going to be the indexed rate. And then they might have a margin, 1%, 2%. So you go, it's going to be around 8.5 to 9. That's the average rate for a HELOC. That's going to be coming down, though. That's definitely going to be coming down.
It is. Yes,
all right. So if you're not eligible or don't want to get a HELOC, because I can't tell anybody what to do with their lives, right?
Mm-hmm.
If they don't want to go the HELOC route, then we go with an unsecured line.
Mm-hmm.
Unsecured, higher risk. Rate is based on risk, 100% all the way across the board. That's why a HELOC will be the lowest. Unsecured is going to be close. It's going to be around 15%.
Mm-hmm.
And you're not going to get much more than $25,000 for an unsecured line. 50 maybe, depending on the bank. Because again, those are very high risk loans for the bank.
Right.
So they're a little tighter on those. You're going to be needing at least a 680 credit score to obtain either one of those.
Mm-hmm.
Now, if I'm talking to somebody and no equity, don't have the credit for an unsecured line, but they've got a credit card in their pocket. Well, we can start on the credit card. It's a revolving line of credit. It just takes a little bit more logistical maneuvering because the credit card has certain policies, procedures, etc., that don't pertain to an unsecured line or a home equity line of credit. But I would definitely prefer the unsecured line if we can get it. But again, if we need to start on a credit card, we can start on the credit card.
Yeah.
And when anybody comes and talks to me, I know this is all kind of heady stuff, but I've got visuals, whether it be ebooks, slides, amortization tables. I've got a very sophisticated process that I take people through to ensure that I'm not inviting anybody that shouldn't be doing this, because there are some people that should not be doing it. And I go through that process to make sure I'm not bringing people into this that I should not be bringing into. So I encourage people to go through the process.
That's great for me to hear too. And as a podcast host, and I think that's really important, and that trust is really important. And your resume was great. And your track record was great. So, and there's questions. People would probably come to you. We're not going to get to all of those questions today because we only have so much time. But, okay, so are you going to pay the same rate if I have a line of credit with my credit card and I'm taking out more? So there's questions like that. And so the educational process, and I'm assuming you've got the videos, you got all that education, you've got slides and all of that to explain that. At least to give people options. And I think the main thing is to have the goal of getting out of debt, of getting out of the huge amount of debt that it's suffocating. It buries you and you can't, you want to be able to breathe again. And so I think that's really important. And I want to encourage people as they are taking next steps at the mid-career halftime of life to have freedom in this next chapter of life. You don't have freedom if you don't have financial freedom. If you're tied down with a huge credit card debt, or you've got too many things. You've just bought this new car. You're hardly using it, or maybe you are using it some, but you made this decision, but it's like,
but it's got a $750 payment.
Yes, that's the problem.
That's the killer.
That is the killer. And
it is.
So there's between those things to where you feel like you're just suffocating is what I'd love to be able to get people out of that. So I'm assuming some of your best advice for Americans and their money right now is just to get out of debt. But do you have any other advice for that for Americans in our country?
Well, I do indeed. If you're not, you got to look at what you're doing, right? As far as the model of banking and borrowing. And it's nothing has changed in banking and borrowing in 50 years. Technology has changed the way the money flows, right? But as far as income, checking account, and, play everybody's little game, that is the core reason for the situation we're in. And if you can look at that and understand that if we continue to do the same thing, nothing is going to change. And if you want to get more out of your life or what you're doing, if you want to get more out of your money, you're going to get more out of life. I've got dozens, hundreds and hundreds of people that will attest to that. And the more you know about what you're doing, the more you're going to get out of it.
That's great.
So learn. Have a desire to learn. Don't be scared of what you don't understand, because what you don't understand is costing you. It's suffocating you. and what you don't understand and what you don't try to learn,
Yeah.
you're going to stay in the same place. And most importantly, I have to say this because I say it to everybody. If you want better for your children,
Mm,
you have to teach them something more. If you're not showing your kids your finances now and they're teenage kids, show them your
mhm.
finances.
Yeah. Yeah.
And if they say, teach me how not to do this, mom and dad, I don't want what you have.
Mm-hmm.
What are you going to teach them?
Yeah.
Who are you going to rely on to teach your kids to not have what you have? If you're feeling suffocated
Mm-hmm.
with your finances, your kids they're going to suffocate.
Yeah.
So
Yeah.
I've been saying this for 19 years. I'm after your kids more than I'm after you, but I
Wow.
need you to get to your kids.
Yeah. Man, the
That's
training,
It's the most
knowledge.
important
Yeah.
thing about our money
Yeah.
is
Yeah. Mhm.
don't pay what we're doing today. We can't pay this forward because our kids will not make it. Our
Yeah.
economy won't make it because so many kids now, they don't even want to buy homes.
Yes, you're right. Yeah.
They don't want any part
Yeah. I don't want that.
of
Hmm.
what we've been doing all these years.
Yeah.
And
You're right.
our country will die.
Yeah.
So
And knowledge is power. It's when you're equipped that way. I learn more from even these interviews because I need to know what the systems are. I need to know where, people are, what they're doing and how it's exciting. It's pretty fun. And with the development of AI and all of this, but this is not AI. These are basic tools, life tools, financial tools, and responsibility. And you create so much freedom if you're able to just get out from under. And I know you help people actually invest as well, in where to put that money and how to go about that. But most of it is getting out of debt. That's the main
I got to
part. Is that
correct you
right?
real quick.
Is that right? Okay.
Like on the asset side,
Hmm.
I've got
Hmm.
my opinion, but I don't help people do that. Right.
Okay.
I don't even like to make recommendations
Hmm.
because I don't like to influence people too much on that side because I'm not that guy.
Yeah.
Right.
Well,
In
yeah.
fact, all the investment options that we have out there, I can talk
Mhm.
everybody out of them before I talk them into them. Right. But I do want to address one thing. Knowledge is
Yeah.
power. Knowledge is
Yes.
potential power.
Hmm.
It's not power unless you put that knowledge to use.
Hmm.
You know
Right.
what I mean? It's
Hmm.
kind of like the word practice. Practice makes perfect. No, perfect
Hmm.
practice makes perfect.
Perfect practice is exactly
Because
right.
I've got the perfectly imperfect golf swing because I've been practicing a bad golf swing for 30 years.
My husband will be jealous if you have a perfect golf swing because
No, it's perfectly imperfect. It's perfectly imperfect.
he comes home very, very frustrated with his golf swing.
Oh no,
And
we'd be playing together, I'm
yeah,
sure.
and I liked the fact that you don't. It's a very slippery slope to recommend. What people get in, and my husband was an RIA. There's a target on your back, first of all, when you are in that business, and you've got all of these series licenses and all of that, but it's still a very slippery slope. And but I think what you do with helping people getting out of debt, it gives so much more freedom, and they have options. And when you have options, yeah, those choices, that's exciting. That's fun. It helps you, be excited to get out of bed every morning instead of going, oh, you
Yeah.
know.
Well, one of the greatest things that comes out of just working with me and not just paying off the debt, but your peripheral vision widens.
Mm, yeah.
So
Yeah.
when you are looking at the asset side, are you looking at offers coming in from the bank or for,
Mm,
a financial planner?
mhm.
It's not so tunnel vision. Oh, wow, that
Yes.
sounds great. It's more like, okay, well, wait a minute. You know what I'm saying?
Right,
You're
right.
much more my people have become much more discerning about
Mhm.
what's being thrown at them,
Right, right, right.
you know? And I help with that process too, because I get people say, "Hey, Bill, I got this in the mail. What do you think?" And
Yes,
I'll help them
exactly.
expand that view.
Yeah.
And they're like, I'm glad
Yep.
I called you.
Well, read the fine print. That's always what I say, you know?
Yeah. Well, and
That's
being
very
able
important.
well, aside from reading it, decipher it
Yes,
because that's
exactly.
legal speak,
Right.
right? That's a whole nother culture that we could talk about,
Yeah. Oh, yeah, yeah, yeah,
But
yeah.
that's the biggest thing is I help people expand their peripheral vision about the world, the financial world that's getting thrown at them. That it's not about rate and payment. It's not about, you know, stock market's been up on average.
Oh, yeah, right.
There's always another side of the coin, and I'm really good at looking at the other side.
Well, that's good. Yeah, that and the golf swing is really well. Again, I really like your common sense that you've given today, which is really, really, really important. I'm going to have you. All of your the show notes will have your information, so people can contact you. They can look at your videos. They can look and see what you have online. Understand a little bit more, because by looking at your website, which I have done, I could understand a little bit more of what you were doing, and it really helped me say, yes, that makes perfect sense, especially for those that, I'll use that word again, are disciplined enough to, and really, you are disciplined enough when you really want to do something and you say, okay, I am committing to doing this on a regular basis, and you would hold them accountable, I'm sure. So on making sure checkups and all of that. So that's really important as working with somebody. So Bill, why don't you give a little bit of that information that people can contact you if they're just listening? But again, everything will be in the show notes.
Yep. Truthinequity.com.
Mm-hmm.
And if you go to the contact page, link up in the upper right-hand corner, you'll find a link to my calendar, my personal calendar. So if you want to just jump on and pick a day where you can get to know each other, it's 20, 30-minute call, how it starts. You will also find my personal cell number.
Ooh.
And so if you want to text me, call me direct. If you call me, you got to leave a message, because I get lots of calls from lots of numbers I don't know. So leave me a message and you're guaranteed to get a return within 24 hours, text, the whole bit. And then my email address is there as well. So I don't hide. I'm available from Sunday to Sunday.
That's a great thing. You were there, and you said I liked your illustration about being in the foxhole. Because and I have associates, others too, that have been in the financial field, and they're at a certain point of their life, they've got all of this, whatever. But when you are in a foxhole, you are in the battle. I mean, you are in the nitty gritty of it. And if you help people be able to pull themselves out, it's a calling. I say, and what I do is pretty much a calling. It's just, I work extremely hard, and making sure I can, keep doing everything that I do, but I love it. There's nothing, what else? I work a lot. I love what I do. So I think by you really, communicating that, that's real, and with the common sense that you've given, and I really want people to understand then where this. I'm glad you explained a little bit of that line of credit, because it's like, okay, where does that come from? And if they're
easy to find. Bank. I mean, there's so much money to lend.
Yeah,
you just got to be lendable.
Yeah. So and you'd be able to analyze
the foxhole. I'm the wingman. You haven't gotten into my personal life, but I grew up without turning around, and there wasn't anybody behind me to catch me.
Right.
And being in the financial trade and dealing with these people are just, what do I do? What do I do? They're on their own with no education, no wingman. And because I never had one growing up, that's my conviction with people, because people are going to hand me some decent money to do something they don't understand with a guy they're not going to meet. That's a lot of faith and trust in a guy.
Sure is.
And I don't take that lightly. I mean, that's why I'm here 19 years later, because you literally, if you're going to honor me with that kind of trust and faith, you are literally a family member. Literally a family member.
Yeah.
Right.
Great.
I've got customers that almost a sister to you.
Yeah.
He's one of my best friends. We say, I love you. When we hang up on the phone. And she found me through a podcast,
Oh, sweet. Yeah.
That's how important this is to me. Right. It's conviction. As you were saying earlier, discipline, desire, you have to be convicted that you're not going to play this game, because the financial situation people are in, it's not their fault entirely, because they're doing the best they have with what they had to work with, and they don't have much to work with when it comes to financial knowledge and understanding
Yes.
of how the
Education.
system really works. What
Yes.
are they doing behind the scenes?
Yeah.
They.
Yeah.
Well,
Right.
I know what they are doing, and that's what I teach people to understand
Mm,
how to take what they're doing and apply it to your life
mm,
to have a very agile, dependable process
mm.
to help you get whatever you want out of life on your own terms.
I love the educational part. I mean, I'm big on education.
I'm
And
100% about
that
education. I
is,
love to learn
yeah,
and I love to
yeah,
work.
yeah.
And my work
Hmm.
is coaching and teaching.
Hmm. That's
I'm the
cool.
Vince Lombardi
Yeah.
of
Good,
finance.
good, good.
You know what I mean? I'm going to turn you into a superstar. If you can
Yeah.
put up with what I'm going to do to you, I'm going to turn
Right.
you into a
Put your
superstar.
socks on right. Yes. Yeah. All of the sort of, but my husband was a professional athlete too. So I've gotten more into the athletics. I did not
There you,
grow up with it at all, but I've been a professional musician. I know what it's like. So
there you
those
go.
discipline habits.
Yeah.
So
But
thank
you
you.
did it because you love it, though,
Oh,
right? I mean,
yes.
it
Love
fed your
it.
soul.
Yes. I loved it. But I had to also establish habits that would help me move ahead because you can have talent and it won't be developed unless you put those in place. And so, yeah, very, very, but yes, loved it. I mean, yes,
Yeah.
that's why I'm a creator. I just figured that out later in life. It's like, okay, you always look back and go, oh, that's why I did that. So thank you so very much. This is delightful. You have made, actually, you've taken a topic that's not always easy to understand and dissected it down. So I feel like um, our listeners could understand part of this. Eyes might have crossed in a little bit of it when you were talking about all the different lines of credit, but there's going to be good show notes with this too, that will dissect a little bit of that. And they're able to call you or look on your website for more of that information. So I think it starts the conversation. And I think that's really, really important in creating more freedom in life. So,
Well, I'll tell you what, if people come and talk to us, me or
mhm,
my partner's available as well,
mhm.
our whole thing is about bringing it to life for you with your
Yes,
numbers. It's not,
yes,
nothing's arbitrary, but
right.
you gotta come see us
Yeah.
without the fear of being sold
First step.
anything. Cause I got nothing to sell you.
Yeah, yeah,
You're
yeah.
the one that's going to make the decision on whether you want you want to hire me or not. But
Right,
we can
right,
bring it to life because I
right,
know the conversation in these shows, it's like,
right.
what? You know?
I know. Yeah,
But
yeah,
if you spend the time,
yeah.
I'll transfer what's in
Mm,
my brain to your brain. We'll
cool.
bring it to life
Good.
and we'll have some fun doing it. I'm pretty good
Sounds
at
good.
making people laugh along the way because it's not a fun subject.
Yeah.
There's
No.
nothing fun about this, talking about money. So I try to do the best I can to make it a
Yeah.
better experience.
Oh, that's so great. Thank you so much. I just appreciate your time and our conversation today. You've enlightened not only our audience, but me in some areas. So you've clarified some things, which is really important. I try to enter these conversations with an idea of, where we're going. So that was wonderful that way. And hopefully our audience feels the same that are listening. And for all of you that have hung on through all of this, thank you so much. I appreciate that. And I am here every week, sometimes a couple times a week. And make sure that you are also getting our newsletter because you won't miss a single podcast, a single article, or a single update. So that's important. I don't do a hard sell. It's very, very informative, a lot of educational stuff as well. So thanks again for joining us. And I will look forward to seeing all of you again next time. So bye-bye for now.
Right up.
Bye. Thank you for joining us. It is because of our wonderful listeners like you that we keep going strong week after week. We'd love it if you'd share and follow us to not miss a single show and even write a review. You can also find all of our articles, products, and links at womenathalftime.com.